With more on these markets and these wild rides, let's bring in Darren Wolfberg, head of U.S. cash equity trading at BNP Paribas. Darren, you are seeing the market flows firsthand. What did you think of yesterday's big move in the stock market?
Definitely surprising, but it's not unprecedented. I mean, we've seen a number of off 1% days for January 1st, and if there's any kind of support to this market, there's 5 other times that we've had a off more than 1.5% day on January 1st. The next 5 days it was up 4.9%. So if there's a silver lining, maybe history will provide some precedent.
Okay, so you sound a little bit optimistic heading into 2016. What do you like?
Absolutely. I mean, if you look at the market, there was a big kind of markup if you go into the end of the year, and it's not untypical to see some of that sell off after kind of the year closes the books. So I think that, as you look forward, earnings are expected to be up year over year. You will see multiple expansion as people rotate out of bonds and into equities. I don't think the Fed is going to raise 4 times. I don't think it's feasible, particularly if you're going to have stress overseas. And then as you get into the election season, I don't think that they're going to get in front of the election. So I don't think it's possible to do a 4 times.
So one piece of economic data out just now, John, I want to bring this in because we are watching futures well off their lows of the session, and maybe even making a run towards the flat line. We'll see. But one piece of economic news out, Fiat Chrysler reporting their strongest December sales figures in 90 years. Does that indicate anything to you?
Car sales have been booming. I mean, that's been one of the boom sectors of this economy. It's a credit-sensitive sector. Interest rates are still low, and I think that's a good indication that the consumer is hanging in there.
And gas is low, too.
Yes. What I wanted to ask Darren about this sell-off yesterday is how much of this is related to taxes? People saw stocks moving up last year in Netflix, Facebook, et cetera. How much of this was people saying, I don't want to take profits on this until after the year is over because I don't want to have to pay taxes on it in April. And then January 1st comes and they say now's the time to sell it just to put off my tax gains.
I think it's a great question. I think when you look at the professional investor that's had a challenging year to begin with, they don't want to make it more challenging. So if you're going to sell a gain to lock in a further reduction in your net performance, why would you do that? So I think from the professional investor's perspective, there was a fair bit of that, as well as marking up your prices as high as possible.
You mentioned the election. Obviously, that's going to play a big part in our finances and our investments, and this is an election year. Who do you see right now as the most business-friendly candidate out there?
Oof, that's a good question.
I put you on the spot there, didn't I?
I would say that between Donald Trump or Hillary Clinton, I think that either one of them would be the most business-friendly.
And who would win in that battle?
Oh, boy. I would say probably Hillary Clinton wins in that battle.
But if his trade policy with, say, China, is that really business-friendly?
It's not business-friendly towards China. It's business-friendly towards U.S. earnings. So in that perspective, I think that it's positive. You got to realize, though, that for a lot of the multinationals, they're getting a substantial portion of their earnings from overseas now. So if you're going to start trade wars between many different countries, that's problematic.
Could this market do anything until this election is settled? Are we going to be just flatlining until November?
I think it can move higher. I think really between now and come May, your seasonality effect, I think that the market can perform pretty well, maybe up 5 to 10%. But I do think as you look at the summer, it's going to be challenging. I think Fed policy is going to be a huge factor in that. Is it going to be a 2 interest rate rise cycle, or is it going to be a 4 this year?
That matters that much, whether it's 2 or 4?
Think about how much we sold off on just 1/4 basis point.
Darren, what's popped up in your research that people aren't talking about right now?
I would say autos are really underappreciated. You talk about the really banner numbers that you're getting from these auto companies, not to mention the fact the mix is moving higher as far as higher profit margin. That's not being talked about enough.
People are buying SUVs.
People are buying a ton of SUVs because oil's at $40 or not even $40.
And they're more fuel efficient than they used to be.
They're more fuel efficient. And I think that is very good for auto companies. I also think at some point, once the airlines get the capacity issues figured out, when it's 11 degrees outside, people are going to make flights to Miami.
Good point. Good point. And with low jet fuel prices, the tickets might be a little bit cheaper. All right, Darren, thanks for joining us this morning.
Thanks for having me. Good.
All right, Darren Wolfberg.